Doing good, people. Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate it. Also, hit that post notification bell so that you're notified every time I upload a new video. Be careful down in the comment section of the videos. A lot of spam, a lot of scammers. I will never ask you to contact me by WhatsApp or Telegram. I also do not invest money for my subscribers, so please be careful. Don't get yourself scammed. If you want to follow me, guys, when I'm not on the airwaves of YouTube, do me a big favor. Get down in that description box and click on that Richard Fain Millionaire Mentor Instagram link and give me a follow on Instagram. And then send me a DM to let me know that you're rocking with me. I really would appreciate that. Guys, I am trying to get this Instagram page up and running. The new Instagram page, obviously my old Instagram page had over 90,000 followers on it. And for whatever reason, Instagram disabled that account. They never really gave me a reason for it. But I understand that's just the way social media works, right? These companies that have these social media apps just kind of do what they want to do. And I'm okay with that. I ain't got no problem against Instagram. What do? You just create your new account and you start building that one up as well. And that's what I've started to do. So I'm good to go. With y'all's help, we're going to get this page up to where we need it to be. Right now, I think we're somewhere in that 6,600 followers on Instagram. So I can't complain, right? There's a lot of people out there don't have 6,600 followers. Now, I know I got over 700,000 folks, subscribers to the YouTube channel. So eventually we'll get a number of those people over to the new Instagram page. I just got to continue to let people know it's there. And that's why I do that in every single live stream and every single video, just to let people know I'm there. And if they want to take a look at the content that I do over on Instagram, hey, go ahead and check me out and then give me a follow and then send me a DM. Let me know you're rocking with me. Let's talk about the website, www.richardfain.net. That's the website. Second link down in the description box. Go check out the website, guys. I got some great digital products over there that I believe can help you collapse time frames and get yourself to your pot of gold at the end of the rainbow. So don't cheat yourself, treat yourself. Get over to the website, www.richardfain.net. Over 350,000 of you guys have already checked out the website, so thank you. Over 1,000 of you guys have purchased digital products. Some of you guys have purchased multiple digital products. So a double thank you to you to making an investment in yourself and doing something to get your knowledge level up, which in turn gets you in a position where you're more confident. And when you become more confident, guess what? You execute better, you build wealth better. So the website can help you do that through those digital products. Also on the website, you can join the Wealth Builders. We got over 1,000, almost 1,100 wealth builders. We are the fastest growing financial community on Patreon, and you can become a wealth builder yourself by just going to the website, www.richardfain.net, second link down in the description box. Go into the website address and just hit that membership button, hit that join button, and become a wealth builder. Come join our financial team, our financial community. Last night we had a Q&A live stream just for the wealth builders. We had a decent little turnout, asked a bunch of questions, I answered a bunch of questions. And it was a great time. We spent about an hour and a half, about 90 minutes in that Q&A, and we had a good time, right? So we'd love for you to join us over in the Wealth Builders. Come on over, join our financial community. Like I said, fastest growing financial community on Patreon. Come check us out. Moomoo, my self-directed brokerage app that I'm going to be using over the next 10 years to 10x the net worth. The good folks at Moomoo have a wonderful offer for you guys. First link down in the description box is the Moomoo brokerage link. Now, if you sign up for Moomoo and you put $100 in your new Moomoo brokerage account, they're going to give you 5 free stocks. If you open a Moomoo brokerage account and you put $1,000 in there, they're going to give you 15 free stocks. Now, guys, that's free money. That's free stocks and free money, right? That is free net worth. There's nobody out there that's giving away free net worth, right? For you to try one of their products. They're going to say, well, hey, try my product and we're going to give you 15 free stocks. Publicly traded companies. Valued anywhere from $3 all the way up to $3,000 a piece. Matter of fact, let me correct that. I believe it's $2 all the way up to $2,000 a piece. So who's doing that? Nobody. Why are the good folks at Moomoo doing it? Because they want to incentivize you to try their brokerage app. Just like they asked me to try it back in January. I tried it. I liked it. Now I use it exclusively. Well, it's my primary brokerage app. Now I have other brokerage accounts, but that one is the primary one that I use to buy paper assets. Guess what? They want you to do the same thing. That's the reason they're willing to give you up to 15 free stocks of publicly traded companies. Guys, don't miss this opportunity to build your net worth. We're going to be talking about something here as it relates to the markets. There's going to be quite a bit of volatility over the next 3 months, and we're going to talk about that in a second. But here's the thing that's not volatile. These 15 free stocks you're going to get when you put $1,000 in your new Moomoo brokerage account. These 5 free stocks you get when you put $100 in your new Moomoo brokerage account. Now you're going to get fractional share trading, right? You're going to get automatic investing. You're going to get DRIP, right? Dividend reinvestment program, right? Automatically. These 3 features you're going to get in the Moomoo brokerage app, along with many other features and benefits. So try it out. Get yourself down in the description box and try it out, and then send me an email through my website, www.richardfain.net. Send me an email. Let me know you opened the Moomoo account, you funded it, and you want the tutorial videos so that can help you learn how to use the Moomoo brokerage app so you can take advantage, in my opinion, over these next 3 months, which is such a deep discount you're going to get on these big boy blue chip assets. You don't want to pass this up, in my opinion. Now, I'm not a financial advisor, not trying to tell you what to do, not trying to tell you what to buy, not tell you what to sell. What I am telling you is I believe there's an opportunity over the next 3 months, September, October, November, 3 months. You got 90, well, not even 90 days, because what is the day is September 10th. So you got, let's say 80 days. You got 80 days to be able to buy at a discount and build up you some wealth. But you need a brokerage account to do that, and you should, in my opinion, try Moomoo. Like I said, they're going to give you up to 15 free stocks. Well, all right, man, let's dive on into this thing. We're going to talk a lot about this market crash that's getting ready to happen. Matter of fact, it's already happened, right? We're in the beginning stages of it. Let's just keep it real. We're in the beginning stages of a market crash. Now, I know crash is a rough word, but it's a word that the YouTube algorithm really likes. And really what it is a consolidation and a correction. It's not necessarily a crash. Crash is a good word for YouTube, for the algorithm, right? The YouTube algorithm loves crash. So I use crash. But really what it is a period of consolidation and correction that's happening over these next 80 days. Really, it was 90 days, but we're 10 days into it. So for the next 80 days, you're going to have a period of consolidation and correction in the market. Now, some of us can look at that as an opportunity, or some of us can look at it as not an opportunity. I choose to look at it as an opportunity. That period of correction, that period of consolidation is not unusual in the stock market. I've been telling you guys this time in and time out. I've been telling you guys this is not unusual. I know a lot of you guys are brand new and you're not familiar with the stock market. You've not spent any time in the stock market. So for you, it's terrifying. You've not seen this. You probably got in the first 6 months of the year where everything was green and everything was just going well. And then all of a sudden you hit July and you felt a little bit of turbulence. You're like, what the world is going on? I thought this thing was always green. I mean, what's going on? You hit a little turbulence in July, right? And then all of a sudden, August rolled around. First week of August, you hit more than turbulence. You were getting thrown out of your seat. And you were like, what the world is going on? I didn't sign on for this. I signed on to make money and be green and go up, never go down. That's what I signed up for. Well, welcome to the stock market. It ain't always green. Good news is history tells us it's green more than it's red. That's what history tells us. But as of right now, we're in the red. A lot of our big boy blue chip assets across all industries, all sectors are having a period of consolidation and correction. I think that's an opportunity. Others may look at it as not an opportunity, right? So you got to figure out what side of the fence are you on, opportunity or no opportunity. But we're going to talk about that, why I believe it's an opportunity and why others believe it's an opportunity if you're willing to do what? Stay the course, right? Stay the course. Some of you will, some of you won't. Some of you will get tricked by the 1% to bail out of this thing. And that's okay. If you feel like it's right for you to bail out, right? So you got to figure that out as you go through this, as we go through this conversation today. You're going to need to figure out, hey, where am I at on this thing? Am I going to look at this as an opportunity? Am I going to look at this as a something to scare me and keep me on the sideline, or sell out of my positions, panic sell? With the fear of I'm going to lose all my money, I'm a panic sale. So you can look at it how you want to look at it. That's up to you, right? My job here is to share my opinion on what's going to happen over these next 80 days. And then once we turn the corner into December, what's going to happen? That's what I want to talk about. Now, in order to get to December, you got to get through September, October, November. So 3 months of turbulence. You got to get through 3 months of turbulence, right? So if you can get through those 3 months of turbulence and pay the price, then you get the reward. If you can pay the price, you get the reward, right? At least that's what I'm hoping. But let's dive into it. So here's the headline. The stock market is headed for a tough 8 weeks, but could see a 10% rally into year end. Fun stats, Tom Lee says. Now, just by hearing the headline, this is what I think. There's a reward out there, Richard, but are you willing to go through the landmines over the next 80 days? Now, they call it 8 weeks, 2 months. I believe it's more than 2 months. I think it's about 10 weeks. But are you willing to go through the landmines over these next 10 weeks, trying to dodge to get to that reward, that 10% reward? Now, here's the thing. It could be deeper, right? I could get a better return. I could get a better reward. But Tom Lee is saying about a 10% reward. So should I be buying these blue chip, big boy blue chip assets, knowing, or at least believing in December going into 2025, I could get a 10, 15, 20% reward if I'm buying today at a discount. They go back up to a premium and I can realize a 10, 15, 20% reward by being patient, being courageous, not bailing out, sticking to the plan, looking past the short term and looking for the long term, right? I don't know. I'm just saying you got to figure that out. But this is how I look at it. So when I run across this article by, where someone interviewed Tom Lee, who I respect, right? He's a bull. He's bullish. But I'm a bullish guy, right? I'm bullish on the stock market. He's bullish on the stock market. So I'm okay with that. But here's what the article says. The stock market is facing a challenging 2 months ahead, according to Fun Stats Tom Lee. Lee said he remained bullish on stocks by the end of the year, despite potential near-term downside. See, these next 2 months, these next 10 weeks are going to be near-term downside. That means stocks are going to go down. ETFs are going to go down. index funds are going to go down. They're going to go down in value. Doesn't mean anything inherently is wrong with the fund or the company, but that's just market behavior, right? Again, I told you guys, you got institutional investors on holiday. They've taken $6.4 trillion of their money and took it on holiday. It's sitting in money market accounts somewhere. They're on holiday. They're not participating right now. Not at the level we'd like them to participate. They're just not. But I've already told you guys that holiday won't last. They got to bring that money back into the market at some point. I believe it'll be in December this year, end of the year, December, into January of next year. And Tom Lee believes the same thing, right? So here we go. Lee said he remained bullish on stocks by the end of the year, despite potential near-term downside. He outlined 6 reasons stocks were still poised to notch a 10% gain in the second half. You already know what stocks did in the first half. Killed it. Let's just look at the S&P 500 as a barometer, as a broader stock market index. That notched somewhere between a 13 to 15 to 16% return, depending upon what you're looking at, right? I'm talking about first 6 months of the year, we notched a nice, clean 15% return in the S&P 500 index, which is a measure of the broader stock market. That doesn't mean you didn't have investments that did better than that. Okay, I get it. But when you look at the broader stock market, I'm using the S&P 500 as my barometer. And in the broader stock market, we saw about a 15% ROI for the first 6 months. Now, Tom Lee is saying he believes even with the turbulence we had in July, the turbulence we had in August, even though August kind of right-sized itself and the broader stock market recovered slightly, we still got to get through September. We got to get through October. We got to get through November, which is election season. That's not going to be pretty. The market is not going to continuously bounce through those 3 months. Yesterday, you saw a slight little bounce yesterday to start the week. What you seeing this morning? Something basically totally opposite, right? You saw a little bounce yesterday, but today let's look at the S&P and see what it's doing so far today. Slight bounce today, slightly up, 54.72, up by about 98 cents. So let's see how it does the rest of the day, right? Slightly still up. So let's get back to Tom Lee. Let's get back to Tom Lee and what his 6 reasons why he believes stocks are poised to notch a 10% gain in the second half. We already know in the first half, we got about a 15% gain. Now we're saying even through all these turbulent times, this consolidation and correction we're going to have in September, October, part of November, why he still believes we can ink out a 10% overall return in the second half, right? So let's keep moving. The stock market is headed for a tough 2 months, but investors could still see a strong rally by the end of the year, according to one of Wall Street's most bullish forecasters. Tom Lee, the head of research at FundStat, issued a rare bearish call for stocks in the short run on Monday, predicting the next 8 weeks could be difficult for investors. That's largely due to turbulence stemming from the upcoming presidential election. He said in a video to FundStat clients, pointing to the latest presidential polls, which show Harris and Trump remain neck and neck. Stocks have dropped around 4% since the start of the month. That's September. By 4% already, and we're just what's today, the 10th? Right? Already down by 4%. Lee said equities could end up dropping as much as 7%, predicting the S&P 500 could bottom at as low as 5,350 points, slightly lower from that the benchmark index traded Monday morning. But that shouldn't discourage investors who are still hoping for a strong year for stocks, he said. As much as 8 weeks are going to be challenging. This is what Tom is saying. As much as the 8 weeks are going to be challenging, I don't think we should lose sight of the full year, which I think is going to turn out to be quite strong, Lee said, outlining 6 reasons he believed stocks could rally as much as 10% at the end of this year. So here's my thing, guys. Be patient, for me at least. I'm going to be patient, keep dollar cost averaging in, keep buying the dip in dip season, and keep doing all the things I can do to accumulate these big boy blue chips. Because I believe by the end of the year, once the election is over, the market will be ready for a year-end rally. Trust me on this one. I've seen it happen before. It's going to go through plugging right along in September, plugging right along in October, turbulence again in November. Then once that election is over and they put whoever they want to put in the White House, guess what's going to happen? Everybody going to be ready for a boom. Let's end the year with a boom. Everybody going to be coming back in, institutional investors, Wall Street aliens, retailers. Everybody is going to want to participate in that last month, 4 to 6 weeks after the election to be able to come out of 24 strong. And that's where a guy like me come in, because I'm going to be buying all these things at a terribly deep discount. Terribly deep discount. September, October, November, while a lot of y'all going to be on the sidelines scared to death and not doing nothing. I'm going to keep it all in cash. Go right ahead. I'm going to be buying the dip. It's going to be dip season, because this is where the wealth is made. Tom Lee trying to tell you where the wealth is made, guys, right now. This is where the wealth will be made in September, October, November, because this thing going to the moon in December. It got to. It has to. That's my opinion now. Y'all know I ain't no expert, and I'm just giving you my little 2 cents. But Tom Lee agrees with me too. He is an expert. So he's an expert that I'm agreeing with. So I'm giving it to you guys. Now here's his 6 reasons why he thinks stocks are going to boom. Here we go. Number 1 reason. The economy looks poised to avoid a recession. That's the number 1 reason he believes we'll get a boom at the end of the year, because the economy looks poised to avoid a recession. Despite fears surrounding economic slowdown, the U.S. economy remains on solid footing, with GDP growing 3% in the second quarter. The job market, meanwhile, held up as expected in the month of August, with the unemployment rate declining slightly to 4.2%. The soft landing is intact, and I agree with him. The soft landing is intact. I don't think we're barreling towards a recession, Lee said. So the number 1 reason he believes we will get a year-end rally, comeback rally, to continue the comeback rally by the year end, is that the economy is doing great and we are coming in. We got a jumbo jet coming in for a soft landing. That's right, guys. We got a soft landing. Big old jumbo jet coming in. 767 coming in. Double wide, double decker coming in. Soft landing, baby. So that's the number 1 reason we're going to get that bounce at the end of the year. So right now, what I'm going to be doing is buying everything I can at a discount. All big boy blue chip, though. No, none of these little, big boy blue chips. Big boy blue chips, ETFs, in individual stocks through the Magnificent Seven. I'm going to buy the Magnificent Seven like crazy. Because by the end of the year, they're going to bounce. That's my opinion. That's Tom Lee's opinion. You got to go out and do your own research and come up with your own opinion. This is not here to convince you that it's going to bounce. I'm just telling you what my opinion is. I agree with Tom Lee. And I agree with Tom's first of 6 reasons why it will bounce, because we're going to get a soft landing. It's already there. It's a done deal. Fed going to reduce them interest rates next week. Yes, they are. 25 basis points. And they're going to keep doing it throughout the rest of the meetings throughout this year. And then in 25, they're coming down another 125 basis points. Soft landing is intact, guys. Guess what we got tomorrow? CPI inflation report. I believe it's going to be a good report. It's coming out tomorrow, CPI inflation report. Followed by on Thursday, the PPI inflation report. Both of those reports are coming out tomorrow, and I think they're going to have good news. I'm going to be very optimistic. Of course, I will be covering them on the YouTube channel, but I'm optimistic. I'm with Tom Lee. We got a soft landing. Number 1 reason why stocks will bounce after the election is because of the soft landing. Number 2, high yield bonds rallied last month. That's number 2. High yield bonds rallied last month. Let's read this. That's a bullish sign for stocks, considering the general pattern of stocks relative to bonds since the start of September, Lee noted. Now, you got to go down that rabbit hole and dig a little deeper, but I'm going to leave it there because that's where Tom Lee left it. But I'll read it for you one more time. Number 2 reason, high yield bonds rallied last month. Here's what he's saying. That's a bullish signal for stocks, considering the general pattern of stocks relative to bonds since the start of September, Lee noted. What's been going on with bonds in September? Go out and do some homework, man. Go out and figure out what is the relationship between stocks and bonds. All you got to go is to Google, type it in, and Google will give you all the information you need. Google AI will give you a little synopsis of what the relationship between bonds and stocks are. Go out and do you some research, learn something. Can't spoon feed you everything. Let's move on to number 3. Third reason why Tom Lee believes stocks will rally by the end of the year after the election. Number 3, more stocks are gaining. Let's see what he means by that. The proportion of S&P 500 stocks that advanced over the number of companies that declined reached a new high in August. That's another bullish signal for stocks, which could suggest another market peak is on its way, Lee said. Such was the case in 2007. That year, the S&P 500 advance versus decline line reached a new high in May, just months before the overall index arrived at a fresh high. I don't think we should be saying the market is topped for the year, he added. So basically, more companies in the S&P 500 are gaining, doing better. That's a bullish sign for stocks. You don't just have the tech sector anymore. He's saying you got other sectors participating in gaining. They're advancing as opposed to declining. That's a bullish sign for stocks. That's a bullish sign for a comeback rally after the election. So that's your third reason from Tom Lee. Let's move on to number 4 reason why stocks will rally by the end of the year after the election. Number 4, NVIDIA's sell-off isn't unique. NVIDIA's sell-off isn't unique. Investors have been spooked by the latest sell-off in NVIDIA. The AI darling that's plunged around 20% from its peak in mid-August. But that might not be an omen for the market that some investors think, considering NVIDIA's historical drawdowns. Last month's sell-off marked the 21st time NVIDIA dropped between 25 and 30% over the last 25 years, Lee said. See, that's why you got to go out there and do some real homework, guys. A lot of y'all think, oh my God, this is the first time NVIDIA has dropped. Oh, what's wrong? The company's terrible. No, they've been around since 1993. And good old Tom just told you, they've done this about 21 times since 1993. Well, the stock price has actually declined by 25 to 30% each time over the last 25 years. Here's the good news. It always climbed back up though. Then it came back. See, some of y'all don't go out and do your research on this company or none of the companies that you invest in. You just do it because some YouTuber said to do it, or some TikToker, 15-year-old TikToker told you to do it. You know what I'm saying? No research. Go do your research on this company. That's why I got 11,200 shares and I ain't worried about it. Because I know where this company, this little 20-25% decline in the stock price ain't nothing. What you got to understand about this company, when it runs, it'll go 50, 60, 80, 100, 150%. Just like that when it's ready. And it's coming back. I ain't gonna worry about it. It's coming back. I'm gonna be patient. Be patient. Hey, 21 times in the last 25 years, it's done this. I'm okay with that. I'm okay with that. I ain't frightened. I ain't scared. I'm just gonna stay the course and keep buying ETFs while I be patient on NVIDIA. I got my 11,200 shares in NVIDIA. I'm patient. I lock them up in the safe. Don't even worry about it no more. Now, my focus is on ETFs. Stacking them things. Just keep stacking them, buying them like crazy. I'm waiting on VGT to drop under $500 a share. I hope it does. I hope it does. Because guess what? A month ago, it was 606. Right now, it's in that 540 range. All I needed to get under $500 a share, and I'm going in. I'm going like ham. Because I'm going to pick up me $200 per share in VGT here in a minute. It's going to go down, and I'm going to wait on it to go down. And when it go down, that's where I'm going to be deploying a lot of the lump sum money right there. I'm going to capture $200 a share in VGT because it ain't going to take VGT long next year to go back up to 600 a share. It ain't going to take it long. So that's what I'm going to do. I'm going to sit tight and wait. I'm not going to be deploying no money, no heavy money into individual stocks. My heavy money is going to be deployed into ETFs like VGT, right? Oh, why are you doing VGT and not SPLG? Well, I'm doing VGT because I know when this thing turns around, it will run faster than SPLG because it's a bigger fund. It's a more popular fund. So when VGT, since it's one of the most popular funds out there, when it goes down, really deep dip, $200 a share, in my opinion, is a deep discount. So if it can get itself under $500 a share, I mean, if it can get itself down in the fours, I think it'll run back to 625, 650 next year. That's my opinion. And that's where I'm gonna pick up me a couple $100 a share because it's gonna run quick. When VGT, when the tech market goes, VGT goes so quick. It just boom, boom, boom. It's lightning quick. Why? Because it's a popular fund. It has $500 billion in the fund. $500 billion. Where FTEC they got like 50 billion in the fund, I think. These guys got 500 billion. They got 50 billion. So it's a different, when VGT moves, it moves lightning fast because it's so popular and it has so much money in the fund. And there are a lot of people who want to come back into the fund at that price. If it gets under 500 a share, if it gets around 450, 475. I'm not saying it will, guys. I'm just telling you that's the target buy price for me. The target buy price is in that 450 to 475 range. If I can get it at that price, I'm going to buy it all day, every day in this next 80 days. So that's what I'm waiting on. That's what I'm waiting on. Okay, let's move on. Tom Lee's fifth reason he believes stocks will bounce or rally at the end of the year. Fifth reason, stocks are on a positive trajectory from the first half of the year. Stocks have had a strong 2024 so far, with the S&P gaining 10% over the first half of the year. Since 1950, stocks have been up 83% of the time in the second half after gaining 10% or more in the first half, with an average second half gain of 10%, Lee noted. Did you know that? Let me read that one more time. Some of y'all didn't catch that. Let me read this one more time. For some of y'all that don't do no homework, let me do this. Let me go through this one more time for you. Stocks have had a strong 2024 so far, with the S&P 500 gaining 10% over the first half of the year. Since 1950 now, see, this is where the research comes in. Since 1950, stocks have been up 83% of the time in the second half after gaining 10% or more in the first half. Did you catch that? So 83% of the time, guys, since 1950. If the first half of the year has been 10% or better, the second half of the year is 10% or better. That's research. That's since 1950. See, that's what I hang my hat on. Because typically when you see something at 83% over that long a period of time, typically it kind of predicts the future. Not all the time, but a lot of the time. 83% of the time it's right. 17% of the time it's wrong. But he's saying since 1950, if you get a first half of the year, at least the 10% in the S&P, which is the broader stock market, that don't mean your little individual stock. We're talking about the broader stock market. That's why I keep telling y'all, you're doing yourself a disservice when you're building wealth if you don't have a broad-based stock market ETF as the baseline for building your wealth long term. I keep telling y'all messing with these individual stocks alone, thinking you're finna build some massive amount of wealth, you're fooling yourself. You're fooling yourself. Your best bet to build wealth is in these ETFs, where somebody else is the expert that has the actual skill set to be the expert. They actually have the technology to be the expert. They actually have all the financial tools to be the expert. All we got is our cell phone. This is your expert. This you and Google. So you're going to build a massive individual stock portfolio using your iPhone and Google. Good luck. All right, here we go. You and your iPhone and Google, you're going to build a multi-million-dollar net worth using your iPhone and Google. Is that the game plan? For some of y'all out here picking all these individual stocks, if that's your game plan, you better go get you a broad-based stock market ETF, man, and have that as your baseline. And let somebody else that actually know what they're doing be the expert. Because y'all already know we don't know what we're doing. We don't. We do not know what we're doing when we're picking individual stocks. That's why we get manipulated all the time by the Wall Street aliens. We don't know what we're doing. We want to act like we know what we're doing, but we don't. That includes me. I'm not telling y'all nothing that I don't. That's why I got a 50-30-20 investment portfolio. 50% S&P 500, 30% information technology ETF, and then 20% stocks. That's why it's not flip-flopped, because I don't know what I'm doing. I cannot outperform the S&P 500, not with my skill set. Not with my iPhone and Google. I can't outperform the S&P 500. Some of y'all think you can, though. The guy's telling you right here where you really build the wealth at. He's telling you what you really need to be hanging your hat on. Stocks have had a strong 2024 so far, with the S&P 500 gaining 10% over the first half of the year. Now, go look at the S&P over the last 90 years. Go look at the S&P 500 index over the last 90 years and see what type of return you get. That's why it's hard to outperform them, guys. So what I would recommend you consider is a broad-based stock market ETF as the baseline for your portfolio. Again, I'm not telling you what to do. I'm just telling you what I do. And it's something you should consider. Because you're never going to listen, man, most of us are not, 99.99999% of us are not going to build wealth just by buying individual stocks. Well, we got to be the expert. Well, we're on the hook for picking winners and losers. Okay, let's move on. Stocks have had a strong 2024 so far, with the S&P 500 gaining 10% over the first half of the year. Since 1950, stocks have been up 83% of the time in the second half after gaining 10% or more in the first half, with an average second half gain of 10%. History already says we're going to finish this year strong, he said. I keep telling y'all history, guys. I keep telling you history. I keep telling you history. It will repeat itself. The stock market is about historical analysis to help you pick the right investments for future gain. You got to look at the history. You can't just listen to somebody on YouTube and think you know everything, because you don't. You got to go look at the history. History already says we're going to finish this year strong. 83% of the time when we finish with a 10% in the first go around, S&P 500, broader stock market, 83% of the time on the back half, we finish 10% or higher. Thus, the bounce in December. So for me, picking up all these good old ETF assets in these next 90 days, 80 days, picking them up like crazy, waiting for the bounce. Will it come? I don't know. History says it should come, though. History says 83% of the time the bounce comes. I like those odds. I like those odds. Okay, number six reason why Tom Lee believes stocks will bounce after the election. Number 6, investors may have already seen the election year low. We may have already seen it, guys. Could have been in August. Could have been in August. Stocks may have already hit their trough this election year. Historically turbulent time for the markets. Though market volatility tends to peak in October of an election year, stocks tend to hit a low in August, Lee said, which means investors may already be through with the worst of the losses. Come on, guys. Help me out. Help me out. Help me out. So just keep that in mind. We're in a challenging 8 weeks, but I think the August lows held, Lee said. Basically, the worst is already over, guys. So what am I doing? I'm going to continue to pick up discounts. I'm going to continue to pick up discounts. Let's do a temperature check. Let's do a temperature check today. Now the S&P is up a whopping $5.89 up $5.89. It's up. It's up to 5,476. Just 10 minutes ago, it was less. Now it's up. I don't know. We'll see. 52-week low for the S&P, 4,103 points. 52-week high, 5,669 points. Here's the low today, 5,462, and here's the high, 5,495. Are we already past the worst lows? I don't know. We'll see. We'll keep watching it. Tom Lee tends to believe we are. So those are your 6 reasons why Tom Lee from Fundstat believes there's a bounce coming at the end of the year. 83% of the time, when you do more than 10% in the S&P since 1950, on the first half, you get a better than 10% back half. I like that. That gives me hope. That gives me a reason to continue doubling down on these big boy blue chips. What are you going to do? What's your game plan? What's your game plan? That's what you need to be asking yourself. I got my game plan. My game plan is right in line with what Tom Lee says. I'm right there with him. I don't know what your game plan is. My game plan is to continue buying big boy blue chip growth ETFs. The key word is growth. I don't want no income ETFs with no dividend, no little dividend. Leave that alone, because I ain't getting enough growth. If I'm getting a high dividend, I ain't getting no growth. I need growth over dividends. For me, in my portfolio right now, where I stand, I need growth. I don't care about the $3 or $4 in dividends you want to give me a quarter. Keep them. Give me the growth. When I get the growth, then I'll go chase income. And it won't be in some little dividend stock. It'll be in something that'll pay me way more than a dividend stock. But right now, I need growth. I don't need no dividend, whatever a lot of y'all around here searching for. Everybody's searching for, if you haven't built any wealth, but you want dividends. You do understand the dividends really don't matter if it ain't enough to take care of you. The dividends matter when you have enough wealth that generate enough dividends to actually take care of you. That's when the dividends matter. If the dividends that I'm getting from an investment ain't enough to pay my light bill, it ain't enough to buy no groceries, then I don't get it. I'd rather have growth over dividend reinvestment. I would rather. Now, you do whatever you want to do. Give me a fast-growing company that don't pay no dividends, I'll take them. I'll go get my dividends later on down the road. I'll get my dividends later on down the road. Now, if you're somebody that has, you're getting $5,000, $6,000, $7,000, $8,000 a month in dividends, that's significant money. But if you're somebody that's getting 80 cents a month in dividends, you're getting $1.80, you're getting $5.80, you're getting $50.80. I mean, for me personally, I'd rather just go chase growth. The dividend stuff, I don't worry about too much. If I get them, I reinvest them. But I don't buy my investments because a stock or a ETF pays a dividend. I buy my investments, stocks, individual stocks, and ETFs that are growth stocks and growth ETFs. I'm looking for the exponential growth, faster than the market, which is the S&P 500 in my book. When I'm looking for growth, I'm looking for companies and ETFs that grow faster than the S&P 500, because the S&P 500 in my world is the broader stock market. So I need to be better than the market. If it's a growth company, it should be better than the market. What kind of growth company underperforms the market? If you got a growth company or a growth ETF that's underperforming the S&P, I don't know. I'm not sure if that's growth. Growth is something that grows faster than the normal. Faster than normal. Normal is the S&P. So if I'm finding individual stocks or if I'm finding ETF, they need to grow faster or better than the S&P. Thank you, Tom. Appreciate you, man. That was a good insight. I like it. I like it. Thank you for sharing that. Let's move on. Let's move on to what's happening right now in the stock market. Let's take a look here. Here's the headline. Stocks wobble as September sluggishness continues. Let's see. Stocks wavered Tuesday as Wall Street kept struggling to find its footing in September. An earlier pop in tech shares fizzled. What do they mean? If you looked at NVIDIA early this morning when the market opened, it popped a little bit. And then all of a sudden it fizzled. That's what they mean. Tech popped a little bit and then fizzled. The S&P dipped less than 0.1% while the Dow slipped 202. So what does that tell you when the Dow is slipping? It's overall stock market. It ain't just tech, guys. It's everything. Because the Dow represents everything but tech. So if the Dow is slipping and the S&P is slipping and the NASDAQ is climbing, what does that tell you? That means tech was climbing earlier this morning. Now, it may fizzle out by the rest of the day. I don't know. But my goal here is, and my understanding in my mind is, I'm not looking for any big gains. What I'm looking for opportunities. I'm looking for discounts. My gains will come in December. Exactly what Tom Lee said. So I ain't looking for no gains in September. I'm not looking for gains in October. I'm looking for gains late November, December. There's the gains that I'm looking for. Right now, I'm looking for discounts. I ain't looking for no gains. I'm looking for discounts on great companies and great ETFs in the form of tech, because that's what I buy. I buy tech. Now, I buy the S&P, which has the other 10 industries in there, 10 sectors. But really, I'm a tech guy. So that's where we're at. NVIDIA was just 0.2% higher after rising more than 2% at its high of the day. Alphabet, AMD, Meta were also little changed. Tech stocks have been struggling of late, with the technology select sector SPDR fund XLK losing more than 7% this quarter. Those moves come as concern over the state of the economy grows, leading investors to dump high-flying tech names. Bank stocks put pressure on the broader market. Shares of JP fell 5% after the company offered cautious commentary on net interest income for 2025 at an industry conference. Now, for those of you who have been following the financial services industry and a company like JP, it's a giant. That might be an opportunity for somebody. You got a 5% discount on JP Morgan Chase, #1 bank in America, 5th largest bank in the world. I don't know. That might be an opportunity for somebody. I don't know. They're at a 5% discount though, which rarely happens. Today is a bit of a defensive rotation getting overdone. This coming from the global strategist at MRB Partners. You end up with a lot of volatility as people get back from the summer because we had markets positioned in a way that was set up for a lot, in the sense that we had high tech flyers and the Fed trying to justify rate cuts. Traders, Wall Street aliens, have their eyes on two key economic reports that will likely be the next catalyst for stocks. The Consumer Price Index report for August is due on Wednesday. That's tomorrow, followed by the Producer Price Index on Thursday. Investors are betting that the widely anticipated interest rate cut at the Federal Reserve's September 17 and 18 meeting could help assuage concerns over a weakening economy. On the earnings front, cloud platform company Oracle surged nearly 12.5% after posting fiscal first quarter results that topped expectations and announcing a partnership with Amazon Web Services to provide database services. So if you're an Oracle, you got to bounce. You got to bounce. Here's another discount that some of you may be interested in. Shares of Ally Financial sink 15% after Chief Financial Officer Russ Hutchinson said the company was seeing credit issues in the third quarter. Might be an opportunity to buy the dip. I don't know. You guys go do your research, but you got a 15% discount right now. According to a fact sheet summary of the remarks, the executive said that credit challenges intensified in July and August, with retail auto loans a particular area of stress. The commentary from Ally could raise red flags about the broader consumer sector, but there is a chance this is an isolated issue. Clearly, the guide was disappointing and begs the question if this is Ally specific or a canary in the coal mine. Ally spoke to July and August being weaker on delinquencies, and encouragingly, the monthly data we're seeing from the card issuers do not suggest that it is a broad-based issue. Keep your eye on it. Keep your eye on it. As people get in trouble, y'all know the first thing they let go. Credit cards, auto loans, unsecured loans. They just stop paying those things. The last thing they're going to let go is rent and mortgage payment. First thing they're going to let go is car loans, credit card payments, unsecured loans, all that they're not going to pay. If anything hit the fan. So just kind of know that. Good news is interest rates going to be coming down. So that may help and encourage people to kind of hang in there. Interest rates are going to be coming down. It's going to take a while, but they're going to be coming down eventually. So that's what's going on right now, guys, in just the broader stock market as a whole. Again, September, October are going to be rough months. It's going to be rough months. Good news is maybe the roughest part of it is already passed, which was August. Maybe we won't see anything worse than August. But who knows, right? Wall Street aliens are in control of the stock market, so you never know what these guys are going to do, right? You never know. Those reports coming out tomorrow could be a catalyst. They may not be a catalyst. I don't think they're going to really be a catalyst for anything major bounce, because we already know it's already priced in that the Fed is going to reduce interest rates at least 25 basis points. It's already priced in. So okay, maybe a catalyst to keep things level, maybe a teeny weeny bounce, maybe not a full sell-off, but I don't see where 25 basis points is going to change anything, honestly. That's my opinion. So let's talk about my favorite individual stock, which is NVIDIA. Fortune did an article on this that I want to try to run you guys through here real quick. It's a good little article. Well, let's run through it. This is an article by Fortune. Here's the headline. NVIDIA is a bargain now. AI is going beyond the hyperscalers. This is coming from Goldman Sachs. The brutal sell-off in AI chip stock NVIDIA offers investors an attractive entry point. See, we talked about this last night on in the financial community through our Q&A. We talked about this at the current price of NVIDIA stock. And again, guys, just my opinion. I'm no expert here. I'm just a regular guy just giving you an opinion, right? You come up with your own opinion if you want to. That's fine with me. But my opinion is at the price point this stock is right now is a very attractive price point for someone that's willing to stay in this company long term. Now, it may not be an attractive price point for somebody that's trying to be a Wall Street alien, a little baby alien. If you're trying to be a little baby alien, it may not be, because you're trying to do what the Wall Street aliens do, the big aliens. You're a little bitty alien with an iPhone and Google. Well, they got all the resources. You got an iPhone and Google, you just a little baby alien. So for you little baby aliens, 105 is probably not a good price. But for somebody that's in this thing not trying to build wealth and believe that this company can go higher and higher and higher, 105 is not a bad price in my opinion. And that's basically what this article is starting off saying, right? The article is starting off saying that. It's saying the brutal sell-off in AI chip stock NVIDIA offers investors an attractive entry point. See, the key word is investors, not traders. See, if you're a Wall Street trader, it's not attractive. If you're a little baby wannabe Wall Street trader, it's not attractive, right? But if you're an investor, like I am, that's an attractive entry point, is what the article and what Goldman Sachs is trying to argue. Founder and CEO Jensen Huang has seen his company lose 17% of its market cap since issuing muted third quarter guidance that sparked concerns its rapid earnings growth may not be sustainable. Only a handful of companies are currently fueling its booming AI chip business, with just 4 customers comprising nearly half of all NVIDIA's revenue. Speaking with Yahoo Finance on the sidelines of a tech conference hosted by his bank, Goldman Sachs, semiconductor analyst, whoever his name is, remain confident sales will pick up as customers outside of the 3 cloud hyperscalers, Amazon, Microsoft, and Google, start to invest in their own AI compute clusters. Demand for accelerated computing continues to be really strong, he said on Monday, reaffirming his buy recommendation on the stock and arguing the stock was oversold. You are seeing a broadening in the demand portfolio into enterprise, even into sovereign states. Based on the expert's estimates, the Goldman Sachs expert, his estimates for NVIDIA's 2025 profits. NVIDIA's price to earnings multiple is in the low 20s, thanks to the sharp pullback over the past couple of weeks. By comparison, Tesla trades 77 times next year's consensus earnings estimate, according to Yahoo Finance. Is it a bargain? I think it's a bargain. I think it's a bargain. Those that are brave enough, who have patience, I believe, including myself, we're going to really experience a nice little net worth increase here soon. I think so. I think so. NVIDIA has driven this year's gains in the S&P 500 index, but lately it has become a victim of its own success. A combination of production bottlenecks and a lack of meaningful competition means customers are waiting to be allocated supply of NVIDIA's Hopper current generation chip, AI training chips. Those that are able to actually get their hands on this prized resource are paying through the nose, causing profit margins at NVIDIA to balloon. Unhappy with the lack of choice, tech companies, including Amazon and Tesla, are developing their own custom silicon rather than depending entirely on NVIDIA. These proprietary chips can be fabricated at specialized foundries like Taiwan Semiconductor Manufacturing Company, bypassing NVIDIA entirely. The expert acknowledged barriers are dropping when it came to the make or buy question, but argued that the threat is overblown. I agree 100%. Okay, let me just get this clear. I'm Google. I'm a search engine. This is what I do, and this is where I make all my money, most of it. I'm a search engine. Now, I also got a cloud services division that I hope at one point can make a lot of money too. But right now, I'm a search engine. I'm not a chip maker. You don't just come from being a search engine company to becoming a world-class chip maker in 2 days. They don't happen. So, hey, they can say what they want to say about, oh, we're going to make our own chips. They're not, guys. They're not going to make their own chips. Now, they might go to Taiwan and get them some, you know, some raw chips, but then you got to build the chips out. How they going to do that? Please, man. That's all propaganda. Please. For one, NVIDIA H100, and here's why it's all propaganda. He's finna walk you through why it's all propaganda. For one, NVIDIA's H100s command a 90% share of the AI chip market versus rivals like AMD's M1300 series. So no one comes close to its technology. Now, how in the world Google gonna make their own chip that beat that? And they don't make chips. They're not even in the chip making business. But we're gonna just create us a lab and just start making chips that outperform NVIDIA's chips. Don't even make any dang on sense, man. It's just ridiculous. Those customers that are in the process of developing custom silicon are primarily interested in solving compute tasks unique to their businesses. While these would represent lost sales that would have otherwise gone to NVIDIA, the proprietary chips would not be suited for competing with NVIDIA directly on the open market. Bam! Which I didn't think they would. The experts cited Google as an example, saying the company is working on its own AI chips to help improve Google search. By comparison, the group's hyperscaler cloud platform, so the company's or the group's hyperscaler, so you got two businesses, right? You got Google Search, which is the search engine business, and then you got the hyperscaler, which is Google Cloud Platform. So you got the search engine, which you and I use every day. That's the search engine. But then you got the hyperscaler, which is the cloud services business. Totally different thing. So what he's saying is they're looking to try to make some chips for the search engine part of the business, not the hyperscaler part of the business. At least that's the way I'm reading it. Could be wrong, but let me finish up here. So by comparison, the group's hyperscaler the group's hyperscaler, which is the Google Cloud Platform, showed no signs of diminished appetite for the H100 chips. So really what they're trying to do is do in-house chips for the search engine, not the hyperscaler. Totally different thing, guys. Totally different ball game, right? So you got to understand that. They're still buying a boatload of NVIDIA GPUs, and you can make the same case for Amazon. The Goldman Sachs analyst said, within merchant silicon, NVIDIA is the go-to. And even versus custom silicon, they've got the edge in terms of pace of innovation. Goldman bearish on Intel, urging chip maker to finally hit its guidance. At the same time, expert at Goldman remain bearish on Intel, arguing CEO, whoever the CEO is, has an uphill battle. I told y'all this months ago when I read Intel was spending $4 billion a quarter trying to catch NVIDIA. I told y'all they were going to bankrupt themselves. I told y'all that months ago. They were spending $4 billion a quarter. And I said, these people are going to bankrupt themselves. They're going to bankrupt themselves. Here we go. Not only is Intel losing the race with NVIDIA, AMD and Qualcomm on the product side, but its foundry business has no clear path to surpassing TSMC in terms of production technology. Here we go. At the same time, Goldman Sachs analysts remain bearish on Intel, arguing that the CEO has an uphill battle. Not only is Intel losing the race with NVIDIA, AMD, and Qualcomm on the product side, but its foundry business has no clear path to surpassing TSMC in terms of production technology. Companies looking to outsource fabrication of their chips would not risk swapping out the Taiwanese giant for the inferior technology of Intel. This is what the expert at Goldman Sachs is saying. He rates Intel a sell, but offered some advice to Gilsinger on how to at least put a floor under the stock in the near term. For starters, it would help for the company to start hitting what they guide to, he said. They've disappointed the market quite frequently, and that's never good for a stock price. Neither NVIDIA nor Intel could immediately be reached for Fortune, because it was a Fortune article done based on the analyst from Goldman's. So there you go, man. I mean, for me, I'm in a good position with NVIDIA. I'm in a good position with my ETFs. I'm in a good position from an earning standpoint. I continue to earn. And I continue to do what? Keep my expenses low. All the cars I own are paid for in cash. The only expense I really have is the house. That's it. There is nothing else other than the house. That's the only expense that I have. So I keep my expenses low relative to the income that I make. I keep it low. And then what do I do with that income? I put a good portion in reserve, and then I dollar cost average in. Big boy blue chip ETFs. And that's what I've been doing. And I'm going to keep doing that. Keep building up the reserve, keep pouring in over these next 80 days. I'm just going to keep pouring it into ETFs. I don't care about no dividend. Y'all can go chase dividend stocks if you want to, or whatever you want to chase. I'm all growth. I need growth that is at the level of the S&P 500 or higher. So the ETFs that I buy are S&P 500, information technology, and then I'm going to add total stock market. I already have total stock market in another part of my retirement plan through my simple IRA through the company. That's all I buy is the total stock market. But I'm going to flip that over and I'm going to buy the total stock market ETF, not the index fund, but the ETF on this side. So total stock market, S&P, information technology. Those are the three big ETFs. Now, I've already told you, if VGT gets itself under $500 a share, 475, 450, I'm switching gears and I'm going to buy VGT. Because I know when the recovery happens, it's going to go back over $600 a share ASAP Rocky. And I can pick up myself $150, $200 a share quick with VGT. I won't pick up that much with SPLG because that's more longer. It's not going to build as fast as VGT will. VGT, I ain't never seen anything like it in an ETF. That thing builds so fast. I just ain't seen anything like it. So for me, I can't buy it at $600 a share. But during this next 80 days, if it gets beaten down to about 450, 475, I'm all in. I'm all in. Because once the bounce comes, you guys got to go do your research on VGT, man. Once that bounce comes, how fast this thing goes back up to where it left off is amazing to me. I've never seen anything like it. I mean, once the tech rally hits, VGT goes to the moon, man. Quick. Not no 6 months, quick. Within 2 months, boom, it's back up to $600 a share. $590, $600 a share within a matter of a month or two. So, but don't get me wrong, you got to have the perfect storm. You got to have the tech market booming for it to do, because it's an information technology ETF. So the more NVIDIA and the rest of the hyperscalers and the mega caps and and the semiconductors do. Now, don't get me wrong, information technology is just not that. You got also companies like MasterCard, Visa, PayPal. You got companies like that in there too. Payment system companies as part of information technology. You got payment system companies in there too who do well. Visa does well. MasterCard does well. PayPal does well. So you got other information technology companies in there, payment system companies. Obviously, NVIDIA is in there and more, right? So VGT has about 375 companies in VGT, and they're all big boys. So my thing is, if it can get itself down to the buy price, 450, 475, and I don't know if it'll get there. I don't know. But if it does, over these next 80 days, that's a target. Outside of that, I'll just keep buying SPLG. I'll keep buying FTEC. And of course, I want to add total stock market, because I think with total stock market, that just gives me small cap, mid cap, right? Throw a little bit of small cap and mid cap in the total stock market. I can't get that in the S&P. I'm only going to get large cap in the S&P. But if I throw a total stock market ETF in there, I can get small cap, mid cap, and large cap, which I like, right? Which I like that. So I think with this thing bottoming out over the next several months, it's going to bottom out, I think. I don't know if it'll be worse than August, like Tom Lee said. Maybe the worst has already happened, right? But I still think we go lower, or we stay lower for longer. Put it that way. We stay lower for longer, but that gives me an opportunity to pick up a total stock market ETF at a discount, and then obviously hold that thing for the rally, for the market comeback, hold it. Will I buy any individual stocks? No, unless it's NVIDIA at a deeper discount than where it's at right now. It has to be a really deeper discount, right? I need it at a deeper discount. Will I buy any other individual stocks? I don't think so. Again, right now, man, it doesn't make sense to buy any semiconductors. Well, I guess you could buy semiconductors at a deep discount and hold them. They will be coming back at some point. But you got to understand, I already have 11,200 shares of NVIDIA. That's the best semiconductor. So it doesn't make any sense for me in my portfolio to say, okay, I got 11,200 shares of the best semiconductor out there, but I'm going to go buy AMD 10,000 shares. I'm going to go buy Broadcom 10,000. No, I already got the best semiconductor out there with the best chips and the most market share. That's where I hang my hat. Now, if I decide to buy individual stocks of another sector, maybe if there's another sector out there that I can pick up, some growth, which I haven't really found another sector right now that I'm interested in investing in other than the tech. Now, of course, I invest in all 11 sectors through the S&P, because you got every sector, every industry represented, all big boy blue chip, top 500 companies in the S&P. So I do invest in the S&P, which gives me exposure to other industries, other sectors. But individually, will I go out and just buy individual stocks of other sectors? I probably won't. I looked at Sirius XM Holdings. I know they did I think they did the reverse, whatever they did. I don't know why Buffett bought that. I don't know if it's a tax play, I don't know what Buffett got going on for that, but I don't think it's a short-term thing. So me to wrap up a bunch of money in that and just sit there for 3 or 4 years like Buffett can afford to do, I don't think I can afford to do that. I don't want to do that. Now, if it was a play that was getting ready to happen and I thought, okay, but I don't know if I want to put that kind of money into that company just to sit there for 3 to 4 or 5 years like Buffett can do. I don't know if I can do that. So no, I thought about it last night. I thought about it yesterday. Should I get me some? And I decided not to. Right? So some of the other little plays that I've been looking at, I just have not pulled the trigger on because they're just not at the price point. You still got Serve Robotics. It's at $6.85 a share. I know that looks good, but the problem is how long will it just sit there? It's not moving enough, right? It's just sitting there. Why do I just want to? You can get 685 at any day of the week for the next 2 months. No sense of buying it right now today, because it ain't finna bounce anytime soon. I can promise you that. So, Serve is off the table right now. Allied Digital, they're down to 597. They had a little bit of a bounce yesterday. They got themselves up to like 658 a share. And had I had the right frame of mind on last Friday, I would have picked this thing up and it made me a couple bucks a share and parachuted out of it. But I missed it. So I missed my window. So ain't no sense in me buying it at $6 a share. Again, this is another one that ain't finna go from $6 a share to $12 a share anytime soon, because the market just ain't doing that right now. So, Applied Digital is still on the short list, but I got to be at the right price. I can't buy it at the peak price and then it just sit there for, no. Let's see what else is out here. Rocket Lab. Let's take a look at Rocket Lab. Rocket Lab is at $5.99, another one. I think will be a great little stock. But at this point where we are in the cycle, none of this stuff is going to be booming, especially if the big stuff ain't booming. So again, with these shorts, man, it's not my intention to buy them and have to sit on them for 18 months. With the shorts, the intention is I buy them and within a month or two, make me some spread, get out of them, and then when they go back down, just keep doing that. But just to sit at $6.85 a share in Serve for the next 2 months with the money tied up in there and it ain't really doing nothing, just don't make any sense. I'd rather go chase ETFs. So yeah. And then where are we at on, let's see where we're at on some bigger plays. Let's see. Okay, Broadcom is up today, $4 a share. So Broadcom right now is at 144.82, up $4 a share. Not bad, not bad. I mean, but again, look where it fell to though, where it came from to, so again, NVIDIA, 106.07, again. So started out fast, started out good, opened at 107, got up to 109, market rejected it, back down. And this is what you're going to get, guys, over these next 80 days. This is what you get. This is what you get over the next 80 days. So I'm saying to myself, okay, Richard, just pick up the best parts of this thing. Don't just plow money into crap because you think, no, it ain't finna bounce. Allied Digital Corp had its bounce. Had I got in at $4.50 on Friday, rolled it up $2 a share yesterday and dumped it, that would have been a nice little payday. Unfortunately, I didn't do it. So right now it's 6 something or 5.95. Ain't no money to be made there right now. If it falls back down to $4 a share, 4.25, 4.50, then. But right now, it ain't no money to be made right now. 105 for NVIDIA, 106 for NVIDIA. If I didn't have my 11,200 shares, I'd be all in on it. But I already got 11,200 shares, and I think my average cost per share is around 105. So I'm already where I need to be. Ain't no need of me picking it up at 105, and I already got it averaged out at 105. If I'm gonna pick it up, it needs to be 95, 90. Then it makes sense to pick it up and add more shares. But right now, it doesn't make sense. Of course, it don't make sense on Broadcom. It don't make sense on AMD. It don't make sense on any of those guys because they're chasing the 900-pound gorilla. Already got enough shares of that. We talked about Sirius XM Holdings, $25.59. Of course, that's with the merger and all this other freaky stuff that they did. So that don't mean it went up from $2 and something to, it's kind of freaky. I can't explain it, but it was a reverse something. I don't know, but I ain't buying it at this point because, yeah, it's not a buy for me right now. So right now, the only thing I see on the horizon outside of dollar cost averaging for me right now is VGT. That's the only ETF right now that I am willing to put a 6-figure lump of money in if it's at the right price. I'm not going to do anything else like that though. I'm just going to conserve the cash If VGT gets down in the 450, 475 range over these next 80 days, then I'll take six figures and throw it into VGT and just wait until December next year, and I'll get a nice little return on that as the tech market recovers, because it will go up, and when it goes up, it's going up fast, at least from my history with it. I've invested in VGT since 2020, so I have a lot of experience with VGT and the swings in it and what it does. Continue to dollar cost average in SPLG, continue to dollar cost average into FTEC, continue to dollar cost average into the MAG 7, and that's the game plan. Continue to make money, keep the money on the sideline, and attack when it's appropriate. If it's not appropriate, I'll just keep doing what I do. I'll just keep the money on the sideline until it is appropriate. Right now, I can't make no money in no shorts because they just not moving. They're just kind of flatlined, right? Most of my shorts are flatlined. None of them are moving in a position where you want to put any significant money in them because they're just not moving fast enough. And they're just not. So right now, it's just sitting tight, keep earning, keep making money, keep my expenses low, and just wait. Keep dollar cost averaging in 50, 30, 20 every month. Keep dollar cost averaging in on the simple IRA through VTSAX. Keep doing that. And then just keep doing the dollar cost averaging right now. No lump sum activities right now. It's just too volatile for individual stocks to be putting money into that. And no, I'd rather just leave it in the money market until there's a real strong play at present like VGT. If that presents itself, I'm gonna put money in that. But these individual stocks, I already have what I need. I have what I need. 11,200 shares, and then I got my Magnificent 7 shares that I've been dollar cost averaging into. I'm not going to go out and buy $100,000 worth of Google or that's just not right now. That's not the right play, at least for me in my portfolio. But you got to figure out what's right for you guys and act accordingly and move accordingly. You got to figure out what's best for y'all, man. I just wanted to take you through a little bit of the stock market and what Tom Lee had to say and his 6 reasons why he believed there will be a rally. I still believe over the next several months we'll continue to consolidate and correct. Now, I'm hoping, like Tom Lee said, the worst part of that is behind us, which was August, right? And again, get out there and do your own homework and figure it out for yourself. I'm not here to help you figure it out. I'm here to just give you my opinion and tell you what I'm doing. Whether you like it or not, I really don't care. I'm going to do what I want to do anyways because it's my money. And again, I've been doing this for 30 years, and I've already created a 7-figure net worth in the stock market. So for those out there that's talking who ain't created nothing, I don't know. I'm okay with my strategy. It worked, right? It worked. So for those of you who want to be experts who ain't done nothing, you might want to figure out your strategy and get you some wealth first, and then you can, articulate your opinion. But for right now, okay. Let's see if I got anything else for you guys before I get out of here. I think that's it. I think that's all. I think we're done. I think we're gonna shut this thing down. I think we've gotten to a point where y'all know, and I've communicated my opinion on what's happening. Again, guys, if you want them 15 free stocks from Moomoo, you got to get down in the description box and click on that Moomoo link. And Moomoo, the good folks at Moomoo are going to give you up to 15 free stocks. You put $100 in your new Moomoo brokerage account, they give you 5 free stocks, publicly traded companies. Could be small cap, mid cap, large cap, who knows? Could be a hyperscaler, could be a mega cap, could be a semiconductor, could be a utility, could be a retail. I mean, who knows? If you put $1,000 in your new Moomoo brokerage account, guess what? They give you 15 free stocks. Not bad, huh? Just for trying out their brokerage app. So get down in that description box, click on that Moomoo link today, and get yourself up to 15 free stocks. This is A time, guys, where any free stocks I can accumulate, I want to accumulate them and sit them to the side and just watch them. They're free. What if they blossom into something very special? Now, keep in mind, these free stocks can be valued anywhere from $2 a share all the way up to $2,000 a share. A couple months ago, one of my folks on the private mentorship club got $2,000 worth of free shares from Moomoo. Not saying you'll get that. I'm just telling you what she got. So there's an opportunity for you to put some net worth in your pocket by doing what? Trying out a world-class self-directed brokerage app that will give you access to fractional share trading, automatic investing, and then DRIP, dividend reinvestment program, automatically. It'll do all of those things for you for free. They don't even charge you for any of that stuff. They don't charge you for no commissions on trades. So listen, man, do yourself a favor. Now is the opportunity for you to seize the moment and buy these big boy blue chips discounted. Tom Lee, a professional, not me, Tom Lee, a professional at this, just gave you 6 reasons why he believes you're going to get a stock market rally at the end of the year. So if I'm going to get a rally at the end of the year, what should I probably be doing right now if I'm going to get a rally? I probably should be buying me some good big boy blue chips at a discount and wait on the rally. It's that simple. Now, that doesn't mean it's going to happen. Tom Lee can't guarantee you nothing. I can't guarantee you nothing, but he did give you some history. Historically, he said since 1950, when the S&P 500 in the first half of the year does better than 10%, the second half of the year, 83% of the time, finishes better than 10%. That's historical data, guys. That's all you can hang your hat on. So, hey, do you want to build wealth or not? You don't build wealth in the green, guys. You build wealth in the red. So guess what? Get yourself down in that description box and click on that Moomoo link and start getting you some wealth. Transfer some wealth to yourself. All right? Also, guys, check out my website, www.richardfain.net. Second link down in the description box. Check out those wonderful digital products that we've put together for you guys in an effort to help get you some financial education about investing. And then that financial education will turn into confidence. And then that confidence will allow you to become a better executor, a better investor. So try out those digital products, everything from investing in real estate with little to no money down to how to prepare, how to get your credit better, right? You also got mindset digital products that help you with your mindset, get you a better mindset with money. If you want to be a better money manager of money, we have a digital product that will help you be a better manager of your money. It will take you through a budgeting course. It'll take you through a budgeting exercise, and it will allow you step by step to build out your budget. It will show you how to do it. So if you're saying to yourself, Richard, I make good money, but golly, I'm spending all of it. I don't know how do I manage that? How do I get myself right? Go get that digital product. It'll walk you through it step by step. See, guys, if you want to build wealth, you're going to have to do some work. I know. They haven't taught you how to do that. I know they don't want you to do, only thing they want you to do is go out and get a job and make money and spend it all. I know that's what they want you to do, but you can't build wealth that way. So if you won't give up those old habits, you won't build wealth. If you want to build wealth, adapt some new habits. Live on less than what you make. Live on a plan. Stay out of consumer debt. Save and invest. If you want to build wealth, develop those 4 habits, those 4 behaviors, those 4 financial principles. Give up that other stuff. That other stuff not going to get you to wealth. And you already know that because you're in the position you're in right now. So if you want to change something in your life, change the activities. You get different results. All right, guys. Also, last thing on the website, you can join the Wealth Builders, which is the fastest growing financial community on Patreon through the website. There's a membership button. There's a join button. If you want to join the Wealth Builders, almost 1,100 Wealth Builders, less than 5 months. almost 1,100 wealth builders in less than 5 months. If you want to join us and be a part of our financial community, join through my website, www.richardfain.net. Second link down in the description box. Make sure you come join us. We'd love to have you. We have a lot of fun over there, and we're building a lot of wealth. Okay? Come join us. Last thing, get down to that description box and click on that Richard Fain Millionaire Mentor Instagram link and give your boy a follow on Instagram, man. And then send me a DM to let me know you're rocking with me so I can say thank you. I really, really would appreciate you guys if you follow me on Instagram. So when you do, send me a DM, let me know you're rocking with me so I can say thank you. Please remember though, a lot of impersonating scammers on Instagram that are going to try to slide into your DMs pretending they're me. They're not. So just know that. So when you get one of them sliding in there, hey, how you doing? You know it's a lie. It ain't me. Just remember that, okay? Well, appreciate y'all, man. Y'all have a rest of a good Tuesday. I'm going to enjoy my Tuesday. And I will see you guys tomorrow at 10:30 a.m. Eastern time, where we will dissect the August CPI inflation report, according to me. I'm going to dissect the thing and give you what I think it means for the broader stock market. And again, all opinion, no expert here, just opinion. I'm not a financial advisor. I'm just an opinion guy. I'm just a truth teller based on my research. I just tell you what I believe. You don't have to believe it. I'm just telling you what I believe. But if you want to go through that report tomorrow, that August CPI inflation report, and get a better understanding from my POV, if you want to get a better understanding from my POV, I'll see you tomorrow at 10:30 a.m. Eastern time. Okay? Well, thank y'all, man. Go out and do something nice for yourself. Go out and do something nice for others. Go out and put some positivity in the world. And then guess what? You get tenfold positivity back. All right? Go out and put positivity in the world, guys, and you will get it back tenfold. If you go out and put negative in the world, you're going to get that back tenfold too. So you pick. Do I want tenfold negative coming back at me, or do I want tenfold positive coming back at me? Your choice, guys. It's up to you. It's your choice. I recommend you go ahead and put some positivity in the world so you can get tenfold positivity back at yourself. It's healthier for you, for the filter system, for the temple. It's healthier for you. So try it. I know some of y'all struggle with that because for whatever reason you struggle with it, but try to change that about yourself. It'll open up a whole new world for you if you just start concentrating on positive. It'll open up a whole new world for you. It will help you. It will help you in this life, guys, to be more positive, right? So thank you, man. Appreciate you. You guys have a wonderful, wonderful rest of your Tuesday. Lock it in with a thumbs up for me before you get out of here. Many of you already have locked it in, so I thank you. Without you guys, I don't exist. So thank you for stopping by this morning, and hopefully you'll stop by tomorrow morning, and in the next morning, and the next morning, and the next morning, because I'm going to be on here 365 days a year. Yeah, I'll be right here. Right here. Hope you join me. Stay strong. Stay long. Thoughts become things. See it in your mind. Hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. Stay healthy. Get wealthy. I'm going to catch you guys on the next one. Peace.